The following is a presentation of TFNN, The Trader's Edge, with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the August 27th, terrific Tuesday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go look at one of our tools. This is the tool I call ending procrastination. You know, perseverance is about as important as gasoline is to driving the car. Sure, there'll be times when we feel like we're spinning our wheels, but we'll always get out of that rut with genuine perseverance. Without it, we won't even be able to start our engines. Now, the opposite of perseverance, well, that's procrastination. Perseverance means never quit. Procrastination usually means we never get started or we never finish the things that we actually start. You want to know the main reason that people procrastinate? This is at least what I have found over time. It's a word that starts with the letter P, and it's the lowest standard that one could set for themselves. That's right, you know it. It's called perfection. You see, everything has to be just right before a procrastinator can start their task. Don't strive for perfection, folks. Strive to be outstanding or extraordinary. Those are the standards worth achieving. If you change your standards, here's the key. You will change your life. Let's go check out the standards here in the markets right now. You've got the Dow futures off 126 points, trade out at 14,805. S&P futures off about 17, trading at 1637 and some change. NASDAQ futures off 35 at 3086. Russell 2000 down 13 at 1024. King dollar, basically flat out there. A bunch of movement in the Japanese yen. We'll take a look at that for sure. Biggest movement out here, percentage-wise, no, it's not the actual markets, not the indexes, not the futures. Well, it is the futures when it comes to the commodities. You've got Goldilocks up almost 2%, trading up $26 and change. Silver's up 58 cents. Hi-ho silver up 2 4/10%. Light sweet crude up 2.5%, up $2.66. Copper's up a full percentage point right now. Our call-in number, 877-927-6648. Feel free to give me a call. We can certainly take a look at your stock chart. Let's start off by taking a look at what's moving, and it's a bunch of things. So let's start off by taking a look at the commodities. Let's start off with Goldilocks out here. Gold right now is trading out at $1420.50. It is on its way to $1441. You know, that's the 1-to-1 A to B equals CD. But very likely what we'll see here is more than a 1-to-1 A to B equals CD. Now, gold on the daily chart, it's in that extreme overbought condition. It can still move higher. If you're in the trades here, you want to just simply tighten up your stops, let the momentum carry it forward. If you take a look at the 200 period 200 period EMA, you're going to see that's right around the 1463 level. I believe it's more like 1488. That's the 1-to-1.272 that will likely see gold, start to pull back from. But got to realize the 1-to-1, which completes a 1-to-1 A to B equals CD. You'll see that complete 60% of the time. There are reasons here for me to believe that we'll see something move beyond that 1-to-1. It has nothing to do with what's going on over in the Middle East or anything. That pattern was set up quite a while ago. In fact, as we had formed that C point of the A to B equals CD. But we must recognize that it certainly is. Gold, that is certainly in an overbought condition. And the question's going to be, just like last night, was filling in for Tom. We were watching the markets push lower. They moved into an oversold condition. When you move into either of those two, a market's either going to do one of two things. Either move sideways. If you're overbought, it's going to pull back or move sideways. If you're oversold, it's either going to move sideways or go ahead and retrace up. Well, our markets, what they did for 12 hours last night, they just simply moved sideways. As I mentioned, that is the most bearish of all patterns, just like the most bullish of all patterns is when you get to an overbought condition and all the market does is just simply move sideways. Let's go take a look at hi-ho silver. That is also completing a large A to B equals CD pattern. No, I've got that out here somewhere. That's right now trying to make the 1 to 2.618 A to B equals CD. The only thing above that is a nice piece of good old apple pie, that would be your 1 to 3.14 and so on and so on. But we'll just take a look at what silver's doing here right now. So you can see, take a look at this move here. This move, if you thought the move off the bottom was explosive, well, it certainly wasn't. But the move off that C point, off that retracement, that point, perfect point, 618 retracement there on August the 7th, it has been an explosive move. You can see that on the daily chart here, if you are watching us on Tiger TV, thanks so much for doing that. Maybe you're listening on your radio or your mobile device at tfnn.mobi. We appreciate that. Remember, this show will stream live to that smart device that you've got just by going to the homepage of tfnn.com. Over on the right-hand side, you'll see, up in the upper right-hand side, you'll see that button, 3 little smartphones. Click on that. The show will stream live. You can watch it in HD in our Tigers Den. That's the best way to view the charts that each of the contributors here at TFNN have. And you can always catch the archive of this show on Channel 9. Now, the 200 period, the 200-day exponential moving average, that's at a price point of $24.92. We're going to call that 25 at $25.25. That's the 1 to 2.618, A to B equals C. We can see silver here also in the extreme overbought condition. It simply means you need to be careful, because if you take a look at the last time silver was in an overbought condition, well, it moved right in overbought on that nice upthrust day on August the 15th. And then what did we see? We saw a 5-day move sideways with small-bodied candles that was telling us a couple of things. Number one, at first it was telling us the market was tired. Well, it was tired. It was overbought, and it just simply was moving sideways after about 4 or 5 sessions of that, and without any kind of deep retracement. The deepest was an intraday push down on August the 20th. That was stopped by the 8-period, 9-period exponential moving average, whichever one it is that you use. Either one of those stopped it. And then we saw the beginning of a move higher, that little coil pattern that we saw that began taking place on Friday. Now we're seeing some additional follow-through. Of course, you can see here, if you're watching us on the screen, you can see it truly is in an overbought condition. That means at some point in time, either one of two things will take place, either move sideways for an additional move higher, or a pullback. Either one of those, just simply tighten up your stops if you are in the trade inside these metals. Now let's go take a look at light sweet crude. Light sweet crude here, that has been traveling, and this is a different chart than what we normally look at, but that's okay. If we take a look at this, what you will see is you'll see a 1.618 butterfly pattern, actually, that completes at that 110 level. Right now you've got light sweet crude. That's trading out at 108. It's trading down at 108.64. It's been up to 108.79. The key here is going to be a close above 109. So even though there's a 1.618 butterfly at the 110 level, I don't believe that's where light sweet crude will go ahead and stop. I believe that it's going to head up to the 114 to 116 level. Why? Well, because light sweet crude, I'll go back to this chart over here. On this pattern, number one, it had been traveling in a 1-year 14-point consolidation range. That price projection set up the 114 level. Now what we have seen is for the entire month of July, that also means most of August, we have, so for about 2 months, what we have been looking at is a 7-point consolidation pattern. That means the breakout either to the upside or to the downside says an additional 7 points. So if it breaks out above 109, then you're looking at about 116. So there's our 114 to 116 range out there. Likewise, a break back below 103, that would be a 7-point move lower. That would get us down into about the 96-ish, 95-ish type range out there. So that's on light sweet crude. All of those are on the moves. Let's go take a look here at the index futures, get a feel for what's going on. Let's take a look. We'll start off by looking at the EKG of the market. That's the 30-minute chart. We can see here that little down thrust that the market pushed down into, coming into that 3:30, 4 p.m. time frame. And then what we saw for a period of 12 hours, we saw the ES Mini do nothing more than just really move sideways within a very tight, narrow, banded range. The low was about 651 up to a high, we'll call it 653. So a 2-point trading range for about 12 hours. And then, ba-boom, at 3:30, 4 o'clock this morning, as the European markets were coming on board, they were selling off. In fact, if we take a quick peek around the globe here, right now you've got the DAX is off 2%. We're going to take a look at that stock chart and see what it really means, at least what it means at the moment. That, however, it's down 170 points, pretty much at the low of its trading session. Over in London, the UK, they're back online after their banking holiday, only down about 0.7% at the moment. That's off 59 points. I was looking at the wrong thing. So they're down about 0.9%. Off 0.7% was the Nikkei last night, closing down 93 points. The Hang Seng off 0.6%, off 130, and the Shanghai up about 0.3%, up 7 points. Again, our call number 877-927-6648. As we take a look here at the ESPN, at the EKG, what we can see, we're certainly in the oversold range. You thought that you had to go to Spain to see the running of the bulls. Well, guess what, folks? As the market opens here in just a few moments, we're going to see the running of the bulls through the door. 12 minutes, we'll see the running of the bulls. And what we're going to monitor is we're going to take a look at the volume. Not during the first 5 or 10 minutes. We're going to take a look at the volume coming into the first 60 minutes out there. By 10:30, we'll get some type of feel. But we will see the running of the bulls out there. The Bears certainly, the bulls tried to, and they had the opportunity up until about the 3:10 time frame yesterday. The Bulls actually had control of the market. And then the Bears, they just simply came charging through, and those Bears are going to be running some bulls through the doors. Let's go take a look at the larger chart out here. In fact, we'll do that when we come back from the break. And what we'll do is we'll take a look at the weakness in the market. Of course, you know that to be the Dow. The Dow is likely going to head for that June 24th swing point today on the futures contract. That level will be 14,731. That would be about another 70 points lower than where we're at right now. 877-927-6648. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
TFNN has just announced our first ever virtual trading competition, and we're giving away $10,000 in cash prizes, and it's free to enter. Sign up by Thursday, September 5th at noon Eastern, and the trading competition will take place the following week, Monday, September 9th, with first place winning $3,000. Don't delay, as you won't be able to register once the competition begins. Sign up now and reserve your spot in TFNN's $10,000 virtual trading competition. To sign up and for all the details, log on to TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is. Folks, you know, when I opened up the show, I talked about perseverance and then the long-lost cousin, procrastination. Now, the good news is that everyone out in the listening audience, there are no procrastinators out there, and that's why each of you are rushing over to the homepage of TFNN.com right now, because no procrastinators out there. You're going to sign up for our TFNN virtual trading competition, $10,000 in cash awards, 70 total prizes. Takes all of about 15, 20 seconds to actually sign up for it. You're putting in your email address, 2 other pieces of information. Boom. You know, you're in. There's going to be 10 runner-up prizes with autographed copied books of the best-selling The Art of Timing the Trade. 10 overall winners are going to receive cash prizes up to $3,000 for first place out there. We're going to have 5 randomly drawn winners each day. That's another $2,500 that's going to be given out because it's over a 1-week period of time. Now, the key here is you need to sign up today because next Thursday, September 5th, by 12 noon, that's the cutoff time period. Contest then will begin the following Monday, September the 9th out there. So please go over to the homepage of TFNN.com and sign up now. Let those folks at TFNN know that you are hearing my voice out here. Now, let's go check out the voice of the markets. We're going to take a look at the Dow future. We're going to go take a look at the daily charts on each of these. I'm going to go ahead and get rid of the red trend line that's on my screen here. We got the price channel line. Those are the blue diagonal lines. We can see price had broken through both the trend and the price channel out there. So I'm just going to go ahead and clean that up just a tad. You know, we've talked about the lower part of the range really being that May 22nd swing point. Well, the real lower part of the range becomes that October 11th, 2007 swing point. Inside the futures, you're looking at 14,267 to 14,105. So we're not there yet, but that is something to be paying attention to for sure. Right now, what we want to focus on is we want to be able to focus on that June 24th swing point. Now, as we speak right now, price is up against a support area. That support area set up by this little piercing candle, most recently here, August 22nd. That low, 14,965. Right now, we're trading out at 14,813, so it's trading below that. You've also got this little bullish engulfing candle right here on the trading session of July 3rd. That sets up the low of 14,751. Well, guess what? At 14,751, you're only a few points away from the top, which is 14,731 of the June 24th high. So that is very much likely where price is going to head to. Now, the Dow futures, they are most certainly in the oversold territory. So at some point in time, we should see a move sideways and or a retracement up. You know, you've got to work off those oversold, overbought conditions. But I do expect what we're going to see here during at least the first 15, 30 minutes, maybe even a bit longer. We're going to see the running of the bulls through the door here as the market, as the cash market opens up at 9:30. So we're going to be paying attention to anywhere between 14,474. That's the low of June 24th. If the Dow is moving down there with volume, that says that the low will be tested. The black squiggly line, sort of squiggly line on my screen, that's the 200-day exponential moving average. That happens to be sitting at 14,522. So 14,522, a potential level of support. And then we've got the low of June 24th, 14,474. Folks, that looks like the destination for price. It's very possible we could see that today, see that unfold. If we see that today, likely what we'll also see is a pickup of volume. But we'll take things one moment at a time, one day at a time. We'll just simply take a look at what the market is providing to us, and then we can make our decisions from there. Of course, if that area gets broken, then you want to be paying attention to that October 2007 time frame. Now let's go take a look at the ES Mini, the S&P futures. What are they doing? Well, prices traveling down into the trend line. You can see we have both here, a rising price channel as well as the trend line. The last time down in June 24th specifically, you can see that it was the trend line that actually held price. That trend line also holding the containing price back in the sequester days, December 28th and December 31st out there. So we'll see if this is an area that is actually going to hold. What you've also got down there, you've got this descending price channel, this little subcorrection price channel that price has been moving in. So it's going to be tagging that area this morning. And if it can break through, and if it breaks through here, here's going to be the key as we'll go back and take a look at the SPYs as well. And you've got basically the B point of the A to B equals CD down. At least what I'm using is the August 22nd candle. That low is 1631.50 because we had enough of retracement. We had a 0.382 retracement. And if it's that candle that gets broken out, then what we're going to see is not really just we'll see at least a mad dash for the June 24th level. In fact, if we take a look at that A to B equals CD down on the futures contract, let's go ahead and do that here before we head to a break. You'll see the 1-to-1 takes it to 1594, but it's to the 1575 to more likely 1550 where the ES Mini would head to. Same type of pattern on the SPY and on the S&P 500. It's all going to be about volume, folks. And we're going to see what that volume begins to look like as we see the running of the bulls as the market opens. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
And we're off to the races. We got the Dow off 106, trade out at 14,840. S&P down 15 at 1642. Composite off 35 points at 3622. Russell 2000 off 10, trade out at 1027. Apple off $1.90. Microsoft down 51 pennies. Google off $5 and change. Cisco down 12. Intel off 7 pennies, a sea of red out there. Popping to the upside, we've got high-tech pharmaceuticals. HITK is a ticker symbol, up a nice 23% here this morning. You got China Commercial, CCCR, up 18% this morning. Acorn, AKRX, up 11%. We've got to the downside, Netflix is off about 1% out here. Goldman Sachs off about 1.5%. Apple down about 0.5%. You know, I ran into some technical problems yesterday. I upgraded part of my system here before I got on the air, and darn if it didn't just change everything that I had on here, so I'll have to rebuild a few things here a little bit later on. In the meantime, let's go check in on the volumes here. What I've got on my screen here, I've just switched the ETFs over to the 5-minute charts out here, just simply so that we can monitor volume, monitor price, see what's going on in the diamonds here in that first 5 minutes of the bulls moving through the door, 346,000 shares out there. And we'll see what, we know that's going to be the big volume spike. We'll see if that continues. In the IWM, it was 1.1 million shares to the downside. In the case of the SPYs, we're looking at 4 million shares to the downside. So that's quite a good bit of volume to the downside there. And inside the Qs on the 5-minute chart, we're looking at a total of 1.3 million shares. Let's go switch over into these ETFs. Let's go switch over into the daily charts out here, so that we can really pay attention as to what's going on. Now, in the case of the diamonds here, let me just refresh my screen. You know, we're paying attention to this date of June 24th. And now what is, the way I take a look at this here, I'm going to go ahead and pull this back. As I take a look at the B point, to me, the B point on the diamonds was August the 21st. If we take a look at the retracement, this has been the weakest of all of the ETFs, obviously. Didn't make a 0.382 retracement. As we take a look at the other ETFs, that is not the case. So the key today, in my opinion, is going to be looking at the August 21st swing point. A close below that with more than 9.5 million shares. That's going to set up the B point of an A to B equals CD down. That says it'll blow through that June 24th area. It doesn't mean that it blows through it today, but it means that you would have a confirmed A to B equals CD down. So again, those numbers that you're looking at, you want to be paying attention to the low of 148.50. That's the August 21st low, and the volume of 9.5 million shares. We'll peek back in on this during the day out here to pay attention, but that is going to be the key. Now, obviously, the ETF, just as the futures contract, just as the daily index is on the Dow, that is in the oversold territory. That says that you can get a bounce, you can get a move sideways, one way or another. That condition is going to be worked up. But this is going to be key for us to be paying attention to. Let's go check out the other ETF structures. I know normally we save this for the 11 o'clock, the 10 to 11 o'clock show, but today this is more important. Just paying attention to each of these ETF structures. Here you get a better idea of why I use that as the swing point for the A to B equals CD down. You can more clearly see it on the SPYs. That's what we're looking at here. You can see that low is 164.19. SPYs have not been below that area, but the number you want to be paying attention to is 159 million. You can see off of the high, and I'm referring to the high from August the 5th. That was at 170.96 down to this August 21st low at 164.19. That's your A to B leg. The C point may, in fact, now be the high of yesterday. I had, really up until about 3:10, you really did have the bulls in control of the market, but boy, the bears truly stepped right back in. So, nonetheless, now, as you're coming into this B point here, you're gapping down today. Does that mean anything? Yeah, it most certainly does. But key is going to be volume. So, again, 159 million shares, what you're going to be looking at today. So far, we've done 12 million shares. No way for me to do the math there. And we don't want to do the math here. We want to wait for at least the first hour or so of trading. But what would that A to B equals CD look like? Well, number one, with it only being a 0.382 retracement or just slightly above it, it says that you'll certainly get down and test that June 24th area. And that is somewhere between the 155.73 to 158.43. That would be a close below August 21st. Again, the number 164.19. That's the number you want to have written down on your pad of paper. Inside the Qs. Now, the Qs here, what is interesting, because we've got some dynamics when we take a look at these markets here. The Qs yesterday pushed higher with volume. The Qs got over the swing point, so here's one of the wild cards in the marketplace. The Qs here, because this market is not going to go lower without the Qs and without the composite. Yes, it's lower right now, but overall the market is not going to go lower until the Qs and the NASDAQ composite decide to go ahead and give way. And in the case of the Qs yesterday, they were pushing into the August 13th swing point, which had 23.9 million shares. Yesterday, the Qs got over that level. They did it with 27.5 million. That's 27.5 going against 24 million shares in, of course, you could use as a benchmark the downdraft of August 15th with 39 million shares. Bottom line is the Qs were pushing that swing point high of August 13th. They were doing it with some volume, and that says that actually the Qs could go back up there and they could test that. So we really need to be paying attention to the Qs and see what they are doing out there because, again, they were the ones that were pushing the swing point highs. This market will not go lower without the Qs, and the retracement thus far, as we take a look at any damage off the highs, you can't find it inside the Qs. You cannot really find it inside the composite out there. So that's what we want to be paying attention to. As far as that swing point here, there's no A to B equals CD down inside the Qs. All there is a consolidation because if we take a look at August 21st out there, that's the same low that we're using inside the S&P 500. We can see that what the Qs did was they made it all the way back up to the top. They made that little 100% move of a move, unlike the SPYs and unlike the diamonds out there. So that's why we've got a little bit of a dynamic going on inside these markets. Let's go take a look at the Russell 2000. Let's go see how that is behaving here. In the case of Russell 2000, it did make a retracement for an A to B equals CD down. So it's only the Qs that are potentially in what we'll call consolidation mode. In the case of the Russell 2000, the IWM, it made a 0.618 retracement. Didn't get all the way up and close the gap. The bottom of that gap was the August 14th session, 104.01. Instead, it got up to a high yesterday of 103.82. 103.73 was the number that was the 0.618 retracement. So, and what we're seeing today for sure in the IWM is a test of the August 19th swing point. That's really your B point of an A to B equals CD down, larger A to B equals CD down. That swing point has 25 million shares. So far, in the first few minutes of trading, we've got 3.8 million shares out there. But of course, the IWM, so the number one strength area of the marketplace is going to be the Qs. When we take a look at these 4 ETFs, number 2 going to be the IWM. Number 3, the SPYs. Number 4, obviously lagging, is the Dow Diamond. So that's what's going on inside each of these ETFs. If we switch back over, take a look at the 5-minute charts. Let's just take a look at volume here. Volume really only during that first 5 minutes of trading inside the diamonds, which we had 346,000 shares. And then we've got lightened up 133 and 106 out there. In the case of the IWM, the first push down, 1.1 million shares as the bulls were getting out of the door, 1.3 million shares. On the next 5 minutes and 483 in this 5-minute session, which closes in about 2 minutes or less time out here. In the case of the Qs here, pushed down with 1.3 million shares, then 1.2. Right now we are at volume is truly dissipating, 380,000 shares with only about 2 minutes left to go. Let's go take a look at some of the currency pairs out here. And, of course, we've got to start with Steve-O's favorite currency pair. Let's start off by taking a look at the daily chart. That's going to be the euro, Japanese yen. This is key because of the directional correlation that this currency pair has to our stock market out here. What we can see is that it made a 100% move of a move. It finally this morning here, early this morning, broke through the swing point of July 24th out there. It set up a beautiful Gartley buy pattern. That pattern worked. In fact, the retracement much deeper than, potentially, and even still today, this still has an A to B equals CD setup on it. The ideal pattern, the ultimate pattern of any Gartley buy or sell is the fact that it forms the next C point of the A to B equals CD down. If we take a look at that, let's not do that first. Let's first go down and take a look at the intraday chart. Do we have a reversal pattern here? Oh, we most certainly do. But now let's go take a look at, see what's going on intraday, because we still have a lot of time left in the trading session out here. Let's go take a look at, let's see, we got the 30-minute chart. I believe I've got the 120-minute chart somewhere. So let's, I'm going to switch over here, and then we can come back to the 30-minute chart. We'll go down one step at a time. That's assuming that the 120 pops up here real quick. If not, I can always change it, of course. Let's see here. Where is it? Here we go. They got the euro, Japanese yen on the 120-minute chart out here. Why do I want to take a look at this? Well, number one, this one, it's a little bit easier for me to scrunch, if that is an actual word out there. And so we're scrunching this together. You can see on the top all the beautiful patterns that the euro, Japanese. I mean, if you trade Forex, folks, go pay attention to this currency pair, because this one has been making just incredibly beautiful patterns out here. The most recent one to form was your A to B equals CD. Your A point came down at the low of 2100 hours. So what is that? 9 o'clock in the evening. That was on August the 11th. That was down at a price level of 127.95. The B point on this was that nice up-thrusting candle on 7 a.m. on August 19th. Your C point happened to be the low that was put in here at 3 a.m. on August the 20th. Nothing like the lightning bolt pattern. Why? Because the market does 75% of the work for you. Then it's up to you to do the other 25%. Well, the 1-to-1, that completed at 132.34. Now what we've seen here, you expect a retracement when you complete a pattern. Of course, we can see here as the 120-minute chart on the euro Japanese yen, it moved into what? It moved into that extreme overbought condition. It's going to go ahead and pull off for a while. It's going to work that condition off, I should say. It's going to do it by doing one of two things, either moving sideways or pulling back. In this case here, it moved sideways for quite a while, and then boom, as Europe came on board here, we saw the euro Japanese yen truly move down, and move down to where? To the 0.786. Do we have a reversal signal yet? No. All that we have is we have the euro Japanese yen pushing down into an oversold condition. You can see it gets down to that extreme oversold condition. This would not be a reversal pattern unless by 11 o'clock, I should say, here on this 120-minute chart, you were to see it close above 130.55. Then you'd have a bullish engulfing. Then you'd have a reversal at a normal retracement level out there. That could be setting up a new A to B equals CD up out here. You want to pay attention to this, because we want to pay attention to how this oversold condition works its way off because it's traveling right now in the 120-minute chart with inside the body of this candle. The body of this candle is really key. That's why a close above it is a bullish engulfing and says, okay, maybe you're going to do something more than really move sideways. In fact, it increases the odds that you're going to do more than just move sideways out here. If all that it does is travel with inside here, then what it could be doing is truly setting up working off the oversold condition to work its way lower. If this works its way lower, guess what? Our markets, too, will work their way lower as well. That's what's going on inside that currency pair. Let's go check out the euro-yen. I'm the euro-yen. We just did that. Let's go check out the euro-US dollar currency pair. Let's go see what's going on inside the queen. The queen is not willing to give up. The queen wants higher price. The queen here continues to try to attack that swing point high from June 19th out there, that level 1.3415. It has had no give up and go. In fact, if we go ahead and we blow this up here, here's that key candle. Just as we were taking a look at on the euro, Japanese yen, inside the euro-US dollar currency pair, it too has a key candle, and that is the August 20th level. And you can see that price has just simply traveled with inside that. A continuation move is a close above the open of that, or the close of that candle on August 20th, which would be 1.3416. That would be considered, that's what I would consider to be a rising 3 continuation pattern out there, and that would be inside the euro Japanese yen. Where would it head to? Well, what you would take a look at here is you'd take a look at the 0.786 retracement level. That would come off of the February 1st high, 1.37098, down to the low that was put in down here back in July 9, 2013. 1.3505 would be your 0.786 area. That would be the next likely target, and it just simply depends on the type and the size of the bar, the type and the size of the bar that would hit that area. That would give us an indication as to whether or not that was where the target was, or does this want to make a 100% move of a move and get all the way back to the 137 area? Because as we can see here, this currency pair, because of this sideways move as it approached those highs, all that it has done is worked off any portion of any kind of oversold condition out there. So that is inside the queen. If we go take a look at the king U.S. dollar index, it's only back about 16 pennies right now, so it isn't doing much out here and really not having any kind of impact on the commodity marketplace out there. On the commodity marketplace out there. Oh, man, I just hit the wrong button. I hate doing that. Well, perfect time to hit it. We're going into break. 877-927-6648. Dow's off 66. S&P is down 12. We'll be right back, folks.
Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. Dow's off 58 right now. S&P is down 12. Composite off 30. And the Russell 2000 down 9. I love technology. Man, where would we be without technology? But when it doesn't work, it can be as frustrating as can be. Yesterday while I was on the show, during the first hour, I ran into a little problem there and kind of went to game plan B. I have learned doing these shows, it's always good to have a game plan B and even a game plan C in the background. And then this morning, as I was preparing for the show, I said, I'm going to go ahead and upgrade this version of the software that I'm using out here. Just make sure that I don't run into that same problem. And I haven't run into that same problem. Instead, I've run into some newer problems out there. No problem. We will weather the storm out here. Let's go take a look at the ES Mini. The ES Mini right now is trading out at 1642. Let's also take a look at what we should expect today. So we had yesterday the opportunity for the Bulls had the opportunity to take over the market. They most certainly did not do that. Now, of course, if they had net advancing issues, the market, the New York Stock Exchange, had net advancing issues somehow today of 510, well, that would give the market in possession back to the Bulls. Now, of course, you would also want to see on the VIX, you'd also want to see it close below the 50-day exponential moving average. Let's go see where that is traveling here right now. We can give you that number as well, so that way you've got the numbers to be focused on and paying attention to. The VIX well above the 50-day exponential moving average. What we do know is the carnage in the market takes place when price is traveling above the 50-day. So we know the bears have control of the market. We know that right now the VIX is traveling above the 50-day, which, by the way, the number on that is 1427. Right now it is traveling out at 1590 out there. So from a from the question of who's got control of the markets and what we're seeing here as far as a bounce. Again, remember, the market got into a very extreme oversold condition, just like last night at 4 o'clock as we came into the close. And the market, in order to work that off, basically moved sideways for a period of 12 hours before it went ahead and let go as Europe was really coming on board here, because Asia didn't do too shabby last night considering the handoff that we gave them. So you've got the 5-10. That's what would be needed, and anything short of that says that bears have control of the market, and what you should be looking for are places to go ahead and add or put on a short position. So where would those places be? Well, if we go back and take a look at the 30-minute chart here on the ES Mini, got a nice bullish engulfing candle. Of course, that was not a problem. It's also a morning star reversal. That says you've got some decent support now down at 1635.75. That's a low coming into 9 o'clock. So where is the best place to go ahead and put on a position? Well, you'd want to first take a look at where's the 0.618 retracement of this move down. The move down I'm referring to is off of the swing point high. We'll take a look at 2 swing points. We'll see if we can get a little convergence there. Let's come from the swing point at 12 noon. This is on August the 26th. So this what's today? That was 2 days. That was Friday, right? So if we go from August the what's today? The 27th. That was yesterday. Hey, it's a 30-minute chart. I'll eventually get this here. All right, so I'm running out of time. Let's get from the swing point high down to the low at 9 o'clock this morning. Number one, you can see the dead cat bounce, 1647. That would be the first place you'd take a look at it. 1655 is your sweet 618. That would be ideal. So 1653, 1655, 1647 on the ES Mini. That's the places where if you take a look at whatever sectors you want to short or whatever index you want to short, that would be the time to go ahead and put on that trade. And then you can take that trade off if the VIX gets below the 50. And from the New York Stock Exchange, you actually see the bulls go ahead and take charge. Folks, get over to the homepage of TFNN.com. Please sign up for the TFNN virtual trading competition. Let them know you're hearing my voice out there. I would appreciate it. 10,000 in cash awards. You're going to be a winner out there. All you've got to do is just sign up. All the details on the homepage at TFNN.com. Have a great Tuesday, folks. Look forward to seeing you in a few or seeing you back in the morning. Take care.
Yeah, it's always better when we're together.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.